Monday, August 27th, 2018, Maneco 64, home of alternative economics and contrarian views. Before I start today, I'd like to thank all the new subscribers, all the existing subscribers for having an interest in the channel, for donating to the channel, for contributing to the channel. I want to update the new subscribers a little bit about the mission of the channel. As you probably haven't seen all my videos, of course, I've got over 1,000 videos in about 2.5 years. My main mission is to expose the fraudulent monetary system that we have, the fiat money system, to encourage my viewers to protect themselves with gold and silver. It's not advice. It's my opinion and what I do, physical gold and silver. I'm also the home of contrarian views. Sometimes I do cover some topics outside of economics and markets, but not that much. My background is actually in the city of London. I worked for 20 years plus in the city of London, and I started my career in Geneva, Switzerland. And I was a futures and options broker for some of the major banks, brokerage houses, and my clients were institutional clients. So the big banks, the fund managers, treasury departments. So that's my background. Today I'm speaking about the Bullion report of 1810 and what inflation really is, because nowadays we've been fooled. We've been led to believe that inflation is a measure called CPI or RPI, things like that. And I'm going to look into a book that I should have read a long time ago. I just recently bought it. It was written in 1977 by Anthony Sutton, called The War on Gold, and I highly recommend it. I'll put a link below in the description if you're interested. You can go on Amazon or anywhere else you want to get the book, of course. For that, though, I will look at the markets and what they're doing this morning here in London, as I usually do, and then I'll talk about the book and inflation and the Bullion report of 1810, which is very interesting and applies totally to today still. So it's 10 to 9 a.m. London. Spot gold at 1205.35. So it's down half a cent. So not much move there. It has been as high as 1209. So we made a new high overnight. 1214.15 I would say is the next key resistance. The low has been 1203.40. Spot silver 1480, basically unchanged. The high's been 1489 and the low overnight is 1478. The Dow is up another 76 points, 25,859. The all-time high there, of course, is around 26,600 earlier this year in January. The S&P, I think, closed at an all-time high on Friday, and it's up another 7 this morning, 2881. NASDAQ 100 future is up almost 0.5%. 75.15. The currencies. So the British pound is down 4 pips, which is nothing really, at 128.44. The euro is down 0.1%, 116.08. And the dollar is actually down against the yen. It's down 0.14% at 111.10. The dollar's down very slightly against the yuan, the Chinese currency, at 680. Oil price 68.50 WTI crude. What about the emerging currencies or emerging market currencies that people have been following very closely? Some people like Jim Sinclair think this is the beginning of a crisis and it's starting there. Well, this morning the Turkish lira dropped quite sharply. It was down as much, well, the dollar was up as much as 2.5% at one point at 6.26. Right now, the dollar's dropped back, but still up 1.5% at 6.12. That's the Turkish lira. Brazilian real is not trading yet, but closed around 4.10 on Friday. So what about Italy as well? I've been covering Italy and the bond market there. Well, the 10-year yield there is still under control for now. It's at 3.11. The 10-year BTP yield down 4 basis points. For all those who were asking if Trump or the U.S. has bailed out Italy, no, they haven't done anything like that. It was reported in the Italian press that when the Prime Minister of Italy met Trump a few weeks ago in the White House, that Trump said he might help next year because the Italian Treasury has a lot of outstanding debt that's coming due. I think that's more of an empty promise, really. If how could the U.S. help Italy if the U.S. has loads of debt itself? The only thing I could think of is the president and the secretary of the treasury using the exchange stabilization fund to prop up the Italian bond market. I don't think the Fed itself holds foreign securities. They might do swaps, which is kept off balance sheet, but that's another story. So I want to go now to this Bullion report of 1810. And what was the Bullion report of 1810? Well, Anthony Sutton in his book, The War on Gold, talks about it. And I'll read here from his book about the British paper pound. What's the British paper pound? Well, it's an example of when the British government suspended convertibility of the Bank of England notes into specie. They used to call it specie or gold coins. And I'll read a little bit about it here. The alarming bullion drain prompted the Bank of England directors to visit Prime Minister Pitt. Subsequently, at a meeting of the English establishment, the King, the Prime Minister Pitt, the Lord Chancellor, the Duke of Portland, and the Earl of Liverpool, it was agreed to ask the Bank of England to stop gold payments until the sense of Parliament can be taken. Thereupon, a not too unhappy Bank of England showed this state's order to its customers without explaining behind the scenes political action and declined to exchange gold for notes. So yeah, from 1797 to 1821, that was in effect. It was during the Napoleonic Wars. But the problem with this was that it was found that the price of bullion in the Bank of England notes started going up. So Parliament asked for a committee to look into it, to look into why the price of gold is going up in the Bank of England notes, and they did that. And this is what they found. And I'll read. The committee cannot refrain from expressing it to their opinion after a very deliberate consideration of this part of the subject, that it is a great practical error to suppose that the exchanges with foreign countries and the price of bullion are not liable to be affected by the amount of paper currency which is issued without the condition of payment in specie at the will of the holder, that the exchanges will be lowered and the price bullion raised by an issue of such paper to excess is not only established as a principle by the most eminent authorities upon commerce and finance, but its practical truth has been illustrated by the history of almost every state in modern times which has used a paper currency, and in all those countries this principle has finally been restored to by their statesmen as the best criterion to judge by whether the currency was or not excessive. And Anthony Sutton goes on to say, in other words, the supply of gold is relatively fixed and the supply of paper is relatively easily expended. So if a state issues more banknotes, the price of gold will rise. So that shows you why, with QE, all the money printing we've had for the last 50 years, especially the last 10 years, it shows you why it's important for the bankers to keep the price of gold under control, and even governments, because it exposes the inflation. Because inflation is the creation of money out of thin air. And even the British Parliament admitted that in 1810. What else does Mr. Sutton talk about? Well, he goes on to say, the clarity of the Bullion report is refreshing. Inflation is an increase in the money supply. And that's what I was talking about. Nowadays, the mainstream media, mainstream economists have been totally brainwashed or trained to believe that inflation is a rise in prices. And I'll continue. It has occasionally been an increase in the supply of gold, but unusually is an increase in the issue of paper notes. Can gold and silver cause inflation? Yes, very temporarily, during the gold rush in California in 1849. It increased prices locally in California, but not for too long. And also in Spain, when they discovered the New World, or if you want to call it something else, and they raped and pillaged the civilizations there and brought a lot of silver back to Spain. That caused inflation. But historically, it's not. It's very rare that gold and silver cause inflation. And the reason why they've been used as money is because they do not cause inflation, usually. They're a good store of value. So, and Sutton goes on to say, disinflation is translated into higher prices. Only convertibility of paper money into specie, limited in supply, provides adequate protection against inflation. He goes on to say, and this applies to today and what I've been saying, the report contained none of the present-day weasel words, algebraic manipulations, statistics, right? Core inflation, PCE, all that rubbish, finger-pointing at trade unions or businessmen, cries about conspicuous consumptions, or other handy but entirely innocent targets. The Bullion report of 1810 laid it out clearly and simply. Inflation is an increase in the money supply. To restrict inflation, you look to the note issuing authority, whether it's a central bank or a government mint, and restrict the note issue. The only effective restriction of a note issue in light of the experience is convertibility into specie, such as gold and silver. So there you have it. So when you hear in the mainstream media or the financial reporters saying that, oh, a rise in holiday travel prices raised inflation. Here in the UK, they say that a lot. Oh, CPI went up. Inflation, they say inflation went up. CPI went up because of more expensive holidays. This is all rubbish. Inflation is an increase in the money supply, and the rising prices is a consequence thereof. So now you understand why gold has to be kept under control, because it exposes the fraudulent nature, the inflationary nature of the fiat money system. If you enjoyed this video, please like, share it far and wide, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Have a great day. Bye.